On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services in that regard, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics, including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. G'day team, let's take a look back at last week, then we will turn our attention to the week ahead. We'll start with global share markets. In the US, the S&P 500 was up another 0.6% last week. It hit fresh highs in what was the 8th positive week out of the last 9. So the US has had a very strong run over the last 2 months or so. Chipmaker Nvidia briefly became the world's most valuable company, although its time at the top didn't last too long. On Thursday and Friday, the share price fell back about 7%, so that saw it end the week back in third place behind Microsoft and Apple. Nvidia is still up a staggering 156% so far this year, and last year, 2023, it was up, I think, 239%. So over the last 18 months or so, since the end of 2022, Nvidia is up almost eightfold. It's been an amazing run. Elsewhere, the UK, Europe, Australia, and emerging markets were all up. Those share markets, they all gained between 0.7% and 1.1%. Japan was the outlier of the major markets. It was down 0.8% during the week. And the local market actually had a difficult week. The NZX 50 fell 1.5%, which is the worst week in about 5 months. You've got to go back to mid-January, I think it was, to find a tougher week for the local market. So the second worst week of the year. I think that is a little bit misleading. It probably was reflective of investors making room in their portfolios for more Infratil. Saw the announcement of a big capital raising from Infratil, so people selling other stocks to make way for that expectation of buying more Infratil. And we did have some index changes that took place at the end of the week, which caused a bit of rebalancing. So that did add to the volatility. Interest rates around the world were little moved. In the US, we saw the 2-year Treasury yield finish at 4.7. The 10-year rose marginally to 4.3. Here in New Zealand, the 5-year swap rate finished the week at 4.4%. So very little moved, even though it fell to a 3-month low at one point during the week. To run through some of the key developments of the week, here in New Zealand, the highlight was the GDP report for the March 2024 quarter, and it came in bang in line with Reserve Bank projections and marginally better than market forecasts. So quarterly GDP increased 0.2% in the first 3 months of the calendar year. That's just the second increase in the past 6 quarters, and it saw annual growth at just 0.3%. So not exciting at all, but at least in positive territory. That was probably where the good news stopped. On a per capita basis, which is a per person basis, GDP decreased during the quarter by 0.3%. And that's actually the sixth quarter in a row where we've seen GDP per capita fall. So for 18 months, things have been getting worse on a per person or a per household basis. And on an annual basis, GDP per capita fell 2.4%, which is quite a bit. So when you look at that in its entirety, at the headline, the numbers are pretty mediocre. But when you look at things on a per person, per capita, per household basis, they go from mediocre to downright awful. So the economy is still in a very difficult spot. As uninspiring as that GDP report was, markets were relieved that it wasn't worse than that. So you actually did see a slight uptick in the New Zealand dollar and in wholesale interest rates on the back of that. Maybe they were expecting the potential for something that was even worse again. In terms of the Reserve Bank and its path forward, markets still see a cut to the official cash rate as a done deal by November. That's fully priced, and there is some potential for a cut that is priced in a little bit earlier than that. But November is where markets have more confidence that you will see some easing begin. So that was the highlight here, the GDP report. We also had a housing market report, and this was equally disappointing. This covered the month of May, and it reflected a pretty sluggish housing market. So, nationwide volumes down 8% for the month, the days to sell in the high 40s, the mid 40s, depending on where you look. And in terms of prices, the house price index slipped another 1% in May. So, that's the third consecutive monthly decline. And after that big fall that we saw from late November through to about May last year, prices have stabilised and values are still 2.5% above that bottom from May 2023, although they've slipped back about 1.4% in the year so far. So the housing market is still in a very subdued spot. Dairy prices, we had some news on that front too. We got the results of the latest global dairy trade auction. The headline index down 0.5%. That's the first decline that we've seen in 3 months. We've had a string of rises, and that headline GDT index is up almost 13% this year and still pretty close to the highest levels since 2022. So it's not in bad shape. Fonterra did provide a business update last month that maintained that $7.80 payout for the season that's just finished, and it announced an opening forecast for the season that's just started that has a midpoint of $8, which isn't too bad. For some farmers, that won't quite cover their costs, and it might be quite close to break even, but with a bit of luck, that will prove to be a little conservative, and we might see something that is closer to the mid eights. So those were the key things that we were watching and that we saw here in New Zealand. Elsewhere, there was a bit going on. On the central banking front, we had 2 central bank meetings, the Australian Central Bank and the Bank of England. So the RBA across the Tasman left its cash rate unchanged at 4.35. That was expected, but it did sound just a little bit hawkish, a little bit nervous about inflation. It noted the need for vigilance about upside risks to inflation, and it did say that it will do whatever is necessary to return inflation to target. And during the press conference, Governor Michelle Bullock sounded a bit more worried about inflation than she sounded about a potentially weaker labour market. So that was quite telling. Financial markets still pricing in some chance of a rate hike, but not a whole lot. It can't be ruled out though, and I think we will have to watch the next few inflation reports. There is a monthly inflation report that's out this week in Australia on Wednesday, but the more important one will be the quarterly CPI report, the quarterly Consumer Price Index report. That's out at the end of July. And the RBA will meet shortly after that in early August, so that could be quite an interesting meeting if that June quarter CPI comes in hotter than expected. So if the RBA was to move, August is the logical time frame, and I think it would probably won't happen. If I had to guess, I would say they'll just be on hold for a slightly longer period than some would like. But if they were to hike again, then we need to keep a close eye on that July inflation report, that July CPI report that will cover the June quarter. That will be quite crucial. So that was the RBA. The Bank of England left its policy rate unchanged as well, 5.25. That's at the highest levels we've seen since 2008. Now, they voted, and the vote was 7-2 in favour of keeping interest rates unchanged. So 7 members voted to leave it as it is. 2 members would have preferred to reduce it by 0.25% to 5%. So the UK has made good progress on inflation, and they are getting closer to that eventual rate cut. The CPI, we actually had some new figures last week. The Consumer Price Index in the UK running at an annual pace of 2%. So that's exactly in line with the Bank of England's target, and it's the lowest since the middle of 2021. So on some level, you could say the Bank of England is there. They've achieved what they need to. However, it's not all about that headline level, because when you look at the detail, there are some elements that probably do give them a bit of cause for concern. The core CPI, is still tracking at 3.5% per annum, and services inflation is still rising at more than 5% per annum. And that latter one, at least, services inflation, was slightly above forecast. So it's not all good news. While those are still the lowest in 31 months and 22 months, respectively, it does suggest that there are some pricing pressures out there. So markets see the Bank of England reducing interest rates soonish. August, potentially September, more likely. So you will probably get a move in the third quarter. So it'll be earlier than we'll see from the likes of the Australian Reserve Bank. But it's not completely a done deal, because you have got some elements of that inflation spectrum that are still looking a little bit sticky. Flash PMIs for June were out last week, and these were probably, for me, the key economic report. I find the PMIs really useful, really timely, so I watch them closely. And they did to point to a global economy that is finishing the June quarter in good shape, with some slowing momentum, though, from May levels. So Europe, Australia, the UK all saw their composite PMIs remain above break even, but they came down from where they were at in April and May. And I think for some of those regions, Europe notably, that's probably due to some of the political uncertainty that we've seen lately with what's happening in France and the elections being called. And you've also got an election coming up in the UK. So then maybe that has played into some of that activity just being curtailed ever so slightly. The Japanese economy appeared to stall in June. The PMI fell to 50, which is bang on break even. That means it's essentially got no better or no worse since a month ago. And something else that was telling was that in Europe, new orders decreased for the first time in 4 months. So a mixed bag there. The United States, however, once again the strongest region of all. The composite PMI rose to 54.6 in June. That's the highest in more than 2 years, and it was led by the services sector. So the US still out in front in terms of being the most resilient and strongest region. Turning to inflation, we did see some progress on that front. The rate of input cost inflation in Europe eased to the slowest we've seen this year. US selling price inflation cooled to levels that have typically been in line with the Fed's 2% target. So not too bad on that front. Things did slow in terms of economic activity everywhere but the US. And when it comes to inflation, more signs that we are making progress. Right, what is coming up? It's looking like a fairly busy week, actually. Globally, inflation will be in the spotlight. We've got the PCE report for May due in the US, as well as flash CPIs across several European countries and the Tokyo CPI in Japan. So the big one amongst all of that will be the PCE inflation report in the United States. PCE stands for Personal Consumption Expenditures, and this is the Federal Reserve's preferred inflation measure. It'll be out on Friday, and this will be closely watched, especially after the CPI, the Consumer Price Index, and the PPI, the Producer Price Index. We've already seen those reports for the same period, and they came in below expectations. So investors will be very hopeful that the PCE report, sorry for all the acronyms, that the PCE report that the Fed watches very closely will reflect a similar trend. And markets are expecting headline PCE to be unchanged in May, so zero, no change. And that would see the annual rate slow to a 3-month low of 2.6%. Core PCE inflation, which excludes food and energy, that's forecast to increase ever so slightly for the month, 0.1%, and also fall to 2.6% on an annual basis. That would be down from April, and that would actually be the lowest we've seen in more than 3 years. So markets expecting good news on this front after we saw those other inflation reports that pointed in the right direction. Markets are still pricing close to 2 rate cuts from the Federal Reserve before the end of this year. And the market sees a 70-odd% chance of the first move coming in September, so a good chance in September, and those odds rise to 100% by November. So November's seen as a done deal, and September is seen as a bit of a maybe. We'll also get the Bank of Japan's summary of opinions from their June meeting. That's out on Monday. We'll get the European Central Bank's latest consumer expectations survey on Friday. And there's also a monetary policy decision out of Sweden. That will be interesting to watch because the Swedish central bank cut interest rates last month for the first time since 2016. So will they move again? It's also a big week on the political front. We will see the first presidential debate of 2024 between Joe Biden and Donald Trump. This is on Thursday evening in the US. It'll take place at 1 p.m. Friday, New Zealand time. I did record an entire episode about the US election just to provide a bit of an update where we're at, who's leading, why they're leading, why this debate is important and a little bit unusual, and who I think will probably win at this point. So go and take a look at that if you want to know more. There'll also be a European Leaders Summit that takes place on Thursday and Friday this week. And France will go to the polls on Sunday. That's the 30th of June. So in a week's time on Sunday for the first round of voting. Remember, it's 2 rounds in a French election. And so you'll have this first round of voting, and then you have the runoff a week later on the 7th of July. So quite a bit going on the political front. Here in New Zealand, it will obviously be a holiday shortened week, but we will get the ANZ Business Outlook survey for June. That will be a highlight that is out on Thursday, and we're probably going to see another subdued release, I would think. The May edition of this report saw headline business confidence fall for the 4th consecutive month. That's at the lowest level since September last year. Own activity, and the own activity measure tends to be a much more useful leading indicator for economic activity. It declined by a similar degree, and this is important, especially in the context of that GDP report we saw, which was okay, pretty average, but okay compared to expectations at least. Remember, that covered the March quarter, so it's kind of old news now, January, February, March, and these business confidence figures probably give us a better feel for how things have been tracking in the current quarter, the June quarter, which is about to end in a week or so's time. So this will be important. It will be closely watched. More encouragingly, even though those confidence figures and those headline measures have been down and going lower, inflation expectations have been improving. They've been falling, and the proportion of firms expecting to raise prices has been slipping as well. It's still higher than the Reserve Bank would like, or higher than it needs to be, but it's at least at the lowest levels since January 2021. So that is moving in the right direction, and it is telling us that inflation over the coming 3 months, 6 months should be subsiding. So we'll be watching that 1 p.m. On Thursday as well. There are a few AGMs to keep an eye on and a few results. Locally, there's a handful of companies holding annual meetings, so we might get trading updates: eRoad, Investor Property, Goodman Property, Kiwi Property, Oceania Healthcare, so a lot of property companies there. Internationally, there are a couple of results that are worth keeping an eye on, a couple of big ones that will be closely watched because they're either companies that are widely owned or they are good bellwethers. FedEx on Tuesday. I like watching FedEx, always learn a lot about the state of the US economy and how things are going in terms of economic activity. General Mills and Micron on Wednesday. On Thursday, Walgreens Boots and Nike. Nike's a pretty big business, a pretty big retailer, and you do learn a lot about what's happening in regions like China or North America or some of those other big parts of the world. So a couple of things to keep an eye on, and more than a couple, to be honest, when you think about the political debates, when you think about that important inflation report, business confidence here in New Zealand, and it's the last week of the June quarter. So in the case of New Zealand, just 4 trading days to go before we close off the quarter. Elsewhere, for the most part, 5 trading days, but we will get to see how the June quarter shapes up and ends, and where we sit in terms of the halfway point of the year. And a bit of a mixed bag at the moment when you sort of look at the quarter overall. New Zealand bonds are up, New Zealand shares are down, Aussie shares down, European shares, Japanese shares also down, but emerging market shares up nicely, up more than 4%. The UK share market is up about 3.5%. The US share market is up about 4%. and the currency, as always, has had an impact, not in a good way this time. We did benefit, or New Zealand investors did benefit from a weaker currency in the first quarter of the year. That boosted, for the most part, boosted returns from international shares and Australian shares, and that has reversed to a degree over the second quarter, because we've seen the Kiwi dollar in these last 3 months rise against the US dollar, the Aussie dollar, the pound, the euro, the yen, so right across the board. So swings and roundabouts in terms of underlying market movements, but I'm expecting that when we do close off for the end of quarter, you will see things come down a little bit once you factor in those currency moves. But lots to watch, lots going on, so hopefully that's useful. Thanks for listening. We'll talk again soon.
For more insights, visit craigsip.com.